Hello, everybody. Good evening. This is Manny. Today, I'm going to be showing you guys how to backtest using the market maker method. Before I start, I'm just going to show you what it looks like um, on setting up market maker templates and charts on TradingView. Um, for those of you who trade market maker, you would know that the best way to trade it is by using the market maker template. Now, since the template can be put onto TradingView, I'm just going to show you how to set it up in such a way that it resembles most of the key ingredients that the MetaTrader 4 template will have. Now, be rest assured that in the full detailed videos on the website later on, I will break down both TradingView and MetaTrader 4 and on how to backtest. So just a couple pointers. First thing you want to do is you want to make sure that your UTC is set to Eastern. Once you have Eastern time set up, so you want to use New York. So it's going to be UTC -4. This makes all your candles Eastern. Now, once you've done that, you also want to make sure that you have your daybreak sessions available. Put them out here. Now you have everything set up. Every 5 p.m. to 5 p.m. will be accounted for. Now, when you're trading market maker, you only want to go back and backtest the last 3 to 5 days to be able to determine what the market makers are going to do with the trend. So with that, we're just going to go back and count each space: 1, 2, 3, 4, 5. We'll place a vertical line to show that. So 1, 2, 3, 4, 5. Now, first thing you want to do when you're trading market maker is you want to determine the trend. Now, if you can't determine the trend, at least you want to see the pattern. But determining the trend is the most important part. Now, you want to make sure that you're following all of the rules. Most market maker traders usually will leave Asian session alone, so that way the market can accumulate orders and consolidate and set things up for London and New York. So the best way to accomplish that with market maker is by using 3 different boxes and making sure that those boxes are accurate. So for the Asian range, we're going to use this color right here, and we're going to go from the Asian time. So Asian market makers come on at about 8:30 Eastern, so that's about 20:30 right here, and they get off at 3 a.m. So we're going to mark it 20:30, which is 8:30 to 3 a.m. So write that. Just make sure that's correct. 20:30 to 3 a.m. I like to make sure it's completely accurate and I have space above the range and below the range. I'll explain why in a little bit. Now, the next step is to create the London range. So that's from 3:30, because you're accounting for the gap time between 3 o'clock and 3:30. Now you're going to have that all the way to 9 a.m. Then you have the last session, which is New York. That starts at 9:30 because of the gap session between gap time between 9 a.m. and 9:30. So we have 9:30 all the way now to 5 o'clock, which will be 1700 on your charts. Now, that's for the first day. So all you're going to do is you're just going to clone and move it over to the next day for the next 5 days. That makes it extremely easy to be able to see what's going on. So I just come over here and I place this, make sure it's accurate, 3 o'clock. I'll check to make sure this is accurate, 20:30. I'll move this range over here, make sure that's accurate as well. I need it to be at 9 a.m., not 9:15. And then I'll adjust. So when I need to adjust, I just range it high, make sure I'm covering and I'm accounting for all of the market movements that happened in that session. So right there. And now I'll just move New York over, and that will be it. So right here, and I'll adjust it as well. Make sure everything is done right. Now we have the first day, we have the second day, and we're just gonna do the same thing for the next 3 days. This makes it very easy for you to be able to see what session you're in, so you're not constantly just trying to find, what's going on. I actually like doing it this way whenever I'm using TradingView. I rarely use TradingView now, and I'll explain all of that in the video later on when I break down market maker method using the market maker software. All right, I'm gonna do the same thing right here. Get it down to 3 a.m. Eastern. Move this down, make sure it gets down to 9 a.m. Eastern. All right, then we get this to 5 p.m. Eastern. We'll bring this down, and that's accurate. And then for the final day, we'll do the same thing again. So this is the most tedious part, but the best thing about trading market makers, if you're a market maker trader, unlike everybody else where they have to, mark up a chart all the way back to 1965 or whatever, you only need the last, couple days, 3 to 5 days. If you want to go back a little bit, maybe go back 2 weeks, and that should already give you all of the answers you're looking for on the chart. So right here, this is all done. Now, the next thing that you now want to do is understand where all your next you want to do is you want to look for all your ranges. Now, we know that in the market maker session, the initial high of the day and the initial low of the day are set during Asia. So you look for the highest point of the Asian range and you place your initial high right here. Now we're going to do the same thing for our initial low, which is the lowest point of the market maker range in Asia. So right here, I'm going to use the color black for initial high and initial low. And I'm going to use the color blue for the extensions, which is the high of the day and the low of the day. Now, when you're trading with the market maker software MetaTrader 4, most of these things are already provided for you. Now, in London session, the market makers will set the actual high and actual low of the day. So that's where these lines come in. You want to place the low of the day right here, and you want to place the high of the day right here. This is where your money is made. Because as you can see on this day, GBP USD set the initial high right here, set the initial low right here. They came back to extend the low of the day. But before they did that, they had first set the high of the day right here. They extended the initial low of the day here by pushing it all the way down here. So your low of the day goes right here. Now within the session, they pulled it right back to the same high of the day here by confirming that this is the high of the day, which you will all recognize as resistance, giving you your entry signal right here for a short. So within just the London session alone, you could have grabbed a 30 pip trade within an hour, 45 minutes, or if you extended it into the New York session, you have your 50 pips, right? Actually, no, yeah, you have about 48 pips. So when you trade market maker, you know 50 pips is the holy grail for this method. That's all you're all trying to accomplish. Even myself, I only trade for 50 pips off the market maker session. Now, once this day is done, the next day comes ahead. This gap right here is what we call dead market time. So if you already know that, you know you're not trading right here. Now we're going to reset the Asian range. Now Asian range right here, initial low, initial high. Now we got high of the day up here, and we got low of the day down here. So the initial low and the low of the day were practically at the same spot. Now, going off of your highs and lows of the day, the perfect trade to take here would be the short in New York, because you didn't get two touches of the low or the high of the day. But if you're advanced, you could have taken the buy, because you'd see that you got two touches here and it only extended the low of the day by about half a pip or a pip, letting you know that you're trapping for the short side, looking to run it up long. So if you took this trade, you're looking at about 75 pips. But if you couldn't identify that trade, now here is your best trade right here, because you have high of the day, you have the spike that closed underneath the high, you have your entry right here, so you can wait for this candlestick to close. Enter right here, place your stop loss above the high. I'll talk about stop losses and take profits in the next video when I'm covering it, but that's your entry right there. New York session gives you 50 pips right off the bat. That's done. And I hope by this point you'll begin to understand what I'm talking about, because the next way on setting it up is initial goes right here, initial high goes right here, market maker extend the high by placing it right here, then they set the low by placing it right here. A rule of thumb, whichever side the market maker extend after they set the initial high and initial low is the side they're trying to trap for. So if they come in here and come in here and they break out of the initial high going up, you know they're trying to trap for the shorts by showing all retail traders long here by running the market down short. And you'll see this 8 out of 10, 9 out of 10, 7 out of 10. The probabilities by understanding just that move alone are extremely high. Now, in London, they set the low, they set the high. They came back in New York to hit that high of the day, closed underneath it. There goes your trade right there. That was your short. Could have taken the short right there. It was about 27 pips. If you ran the swing trade, it was much longer. But by the time the session was getting to a close, instead of paying for swap, you just close out the trade and keep it moving. That was 25 pip trade right there. So next day, come here, same thing. Initial low, initial high. And I'm trying to be as thorough as I can so that way everybody understands what I'm talking about. They extended the low right here in London. They set the high right here. And in the same session, they came back to the high, giving you the M formation. And that's your short. London session today produced 45, 46 pips. If you held it over New York, you would have gotten your 50 pip for the day, and you would have been done. And that's for this day. And then for the most current day, take a look at this. Initial low, initial high. Here, they kept the ranges the same, but they extended it just a little bit, just by just that much. That's all it takes. The high of the day was right here. And what do you have? You have hit to the high, pull back, hit to the high again. That's your entry short. Right there, about 27 pips. And after that short was done, you see how the market makers started trapping the short position holders down here. the trapdoor, the short position holders right here by hitting the low. First here, come back in New York, they hit the low again. You could have taken that buy. They came near the low again, could have taken that buy, but eventually you saw that they were all in consolidation. So pretty much this is how you mark up your charts for market maker using TradingView. There's a whole lot more things that go into it. We'll cover all of that in much details later on, but this just gives you a quick idea on how you can take some quick market maker trades. So I hope you guys enjoyed the video. I'll see you guys next time.